A solo developer just unveiled a $1 billion mixed-use project in North Fort Worth. A Dubai-based firm wants to build a 2,300-acre sustainable city in Kaufman County, and the Texas Attorney General is already investigating. One of downtown Dallas's tallest skyscrapers just went to foreclosure, and it's not the only one. And nationally, home sales just posted the biggest monthly drop in nearly 4 years. Welcome to Jesse's weekly DFW real estate update. I'm Jesse Showalter. Let's get into it. We have a packed show this weekend. Several of these stories have real implications for where North Texas is headed. Let's start with what's happening here locally. Our first story takes us to North Fort Worth, where developer Steve McKeever has announced North City, a more than 300-acre mixed-use development near Alliance, Texas, along U.S. Highway 287. Now, if you're not familiar with the Alliance, Texas, it's Hillwood's massive master planned development that has generated an estimated $130 billion in regional economic impact over the past 35 years. So the location here is very intentional. At full build-out, North City is expected to include 2,200 apartments across 35 acres, along with major retail, dining, and entertainment. Miami-based Resia is already working on 464 apartments on 8 acres at the site. Carrollton-based Cross Development is partnering with McKeever on a 233 unit with plans for roughly 600 more apartments beyond that. On the retail side, several major tenants are already open, including Living Spaces, Carvana, Kura Revolving Sushi Bar, and Andretti Indoor Karting. McKeever also recently opened City Pickle USA, a 16-court pickleball complex with a full gym, sports bar, sauna, and cold plunge. McKeever owns 341 acres at the site and estimates the total development could be worth $1.1 billion at full build-out. Here's the important context. North Fort Worth has been one of the fastest growing corridors in the Metroplex for years, but it has lacked a true walkable mixed-use entertainment hub. This project is designed to fill that gap, and when you layer in 2,200 apartments alongside that kind of retail and recreation infrastructure, you're looking at a development that will create sustained housing demand in that surrounding area for years to come. If you own a home near Alliance, Texas, Hazlet, Saginaw, or anywhere along 287 corridor, this is worth paying attention to. Developments like this tend to strengthen nearby property values over time as amenities and jobs move in. Next up, a story that is generating a lot of conversation across North Texas and well beyond. Dubai-based CSEE Holding has proposed a roughly 2,300-acre mixed-use development in unincorporated Kaufman County. The project is being described as an AI-enabled, sustainable city, and it would be located near Farm to Market Road 1836, County Road 146, and State Highway 243 in the southeastern part of the county. Now, I want to be clear about where this stands right now. This project is still in the very early planning stages. The land has not been purchased. C Holdings does not currently own any of the property, according to Kaufman County deed records. What they have done is begun the process of seeking the creation of 3 freshwater supply districts to support the development. That request came before county commissioners in January. To put the scale in perspective, 2,300 acres is comparable in size to Hillwood's landmark project in Denton, which spans 3,200 acres and is expected to add more than 20,000 residents at full build-out. So this would be one of the larger proposals in the region if it moves forward. The proposal has drawn significant public attention. Texas Attorney General Ken Paxton has announced an investigation and sent document requests to entities tied to the development. C Holding representatives have told the Dallas Morning News that a company executive briefly met with Governor Abbott in Dallas 2 years ago to discuss the project's vision and anticipated economic impact. A county commissioner's discussion that was originally scheduled for February 10th has been postponed, and a community meeting is expected later this month. For a real estate perspective, here's why this is worth tracking regardless of where it ultimately lands. If a project of this scale moves forward in southeastern Kaufman County, it would fundamentally change the development trajectory of that part of the Metroplex. Land values, infrastructure planning, and nearby community growth would all be affected. And even if it doesn't proceed, the attention around it tells you something about the level of outside investment interest that North Texas continues to attract. Now, let's talk about downtown Dallas, because this next story is about more than just one building. Starwood Property Trust has officially taken ownership of The National, a 52-story mixed-use skyscraper in the Central Business District, following a foreclosure. The listed purchase price was $207 million, using existing debt to complete the transaction. The previous developer owed roughly $230 million to Starwood on a project that originally carried a $460 million price tag. High interest rates, falling downtown property values, and apartment occupancy below 80% were all cited as contributing factors. Now, if this were the only headline coming out of downtown, you could call it an isolated situation, but it's not. Just days earlier, the 36-story Harwood Center at 1999 Bryant Street failed to sell at auction. That building sits roughly half empty, and just across the city line in Fort Worth, the former Encore building downtown is now being converted from office space into 330 apartments, another signal that traditional office demand has fundamentally shifted. According to CoStar, the office vacancy rate in downtown Dallas sits at 26.8% right now. Think about that for a second. More than 1 in 4 offices downtown is empty. And this matters for the broader housing conversation because the health of the urban core affects everything around it. When downtown struggles, it impacts nearby residential neighborhoods. It slows redevelopment timelines. It affects public transit investment, tax revenue, and the overall perception of the city as a destination for people and companies. If you look at what's happened in cities like Nashville, Austin, and Charlotte, the ones that have maintained vibrant, well-invested downtowns have also seen stronger residential demand in their urban neighborhoods. Dallas has the bones to be in that conversation. It has incredible cultural assets, major employers nearby, and infrastructure that many cities would envy. But there is a growing gap between the potential of downtown Dallas and the reality on the ground right now. And I think the city needs a serious, coordinated strategy to address the vacancy problem, attract mixed-use redevelopment, and make the urban core a place where people actually want to live, work, and spend time again. Because when downtown thrives, the surrounding neighborhoods benefit, and when it doesn't, the ripple effects go further than most people realize. Now, let's take a look at the bigger picture. The National Association of Realtors released its January existing home sales data this week, and the numbers came in significantly weaker than expected. Existing home sales fell to a seasonally adjusted annual rate of 3.91 million units. That's down 4.4% from January of last year and down 8.4% from December. That monthly drop is the biggest since February of 2022, and this is the slowest sales pace we've seen since December of 2023. Now, there are some important layers here. Weather played a role. January saw extreme cold and historic snowfall in many parts of the country, and that absolutely suppresses showing activity and closings. The South, which includes DFW, saw a 9% monthly decline and a 4.3% year-over-year drop. But here's the other side of the data that doesn't get enough attention. affordability actually improved. NAR's Housing Affordability Index rose to 116.5, the highest reading since March of 2022. That's now 7 consecutive months of improvement. First-time homebuyers made up 31% of sales, up from 29% in December and 28% a year ago. And all-cash transactions edged down slightly to 27%, which is a sign that regular finance buyers are regaining some market share. The median existing home price nationally came in at $396,800, up just 0.9% year over year. That's the 31st consecutive month of year-over-year price increases. But the pace of appreciation is clearly slowing. Total inventory sits at 1.22 million homes, a 3.7-month supply. Here's the takeaway. The January number looks alarming on its own, but it's likely a weather-distorted data point more than a trend shift. The underlying conditions, affordability improvement, rising first-time buyer share, normalizing inventory, still point toward a slowly recovering market. But slowly is the key word here. This is not going to be a fast snapback. The second national headline ties directly into what builders are seeing on the ground. The NAHB Wells Fargo Housing Market Index, which measures builder confidence, fell 2 points to 37 in January. That is the 21st consecutive month below the break-even level of 50, and it missed the consensus forecast of 40. I track this number because it tells you a lot about what's happening in the new construction market. All 3 components of the index moved lower. Current sales conditions slipped to 41. Sales expectations for the next 6 months fell to 49, which puts it below break-even for the first time since September, and prospective buyer traffic dropped to just 23. Here's the part that matters most for buyers. 40% of builders reported cutting home prices in January, with the average reduction increasing to 6%, up from 5% in December. And 65% of builders are actively using sales incentives. That's the 10th consecutive month that number has been above 60%. Now, the February Builder Confidence Report drops on February 17th, so we'll see if there's any improvement. But for right now, what this tells you is that builders across the country, including here in North Texas, are competing hard for buyers. Rate buydowns, closing cost credits, design upgrades, and price reductions are not going away anytime soon. If you're in the market for new construction, this is the kind of environment where preparation and negotiation can save you real money. Now, let's move forward and talk about mortgage rates that we're currently seeing. According to Mortgage News Daily, on Friday, February 13th, when this video was recorded, the average 30-year fixed mortgage rate sits at approximately 6.04%. What's notable about this week is how the bond market responded to some conflicting data. We got a stronger than expected jobs report earlier in the week, which would normally push rates higher, but then retail sales data came in weaker than expected, and the bond market rallied. The 10-year Treasury yield dropped to around 4.049%, its lowest level in roughly 2 months. Mortgage News Daily described the bond market's resilience this week as stunning, and I think that's the right word. Rates have been trading in a very tight range, generally between about 6.06% and 6.21% since early January. That stability matters. It gives buyers a window to plan, to lock, and to move forward without the kind of dramatic volatility we saw through 2023 and 24. Looking ahead, the Fed held rates steady at its January meeting. There is no February meeting, so the next decision comes in March, on March 17th and 18th. Here's the bottom line. Rates near 6% are the best we've seen in over 2 years. They're not going to the 5s overnight, but the environment right now is stable, predictable, and favorable compared to where we've been. And when you compare rates at this level with the kind of builder incentives we're seeing across North Texas, the math on new construction is the most compelling it has been in a long time. And speaking of new construction, let's head to our new construction community of the week. This one takes us a little further north than we usually go, but for a very good reason. This week, we're looking at Bonham, Texas. Yes, Bonham, a small Fannin County town of about 10,000 residents that sits roughly 40 minutes north of McKinney and about 30 minutes east of Sherman. And right now, it is experiencing a development surge that signals something bigger about where North Texas growth is heading next. The big announcement is Powder Creek Ranch, Bonham's first ever master plan community. This is a 400-acre mixed-use development being led by Dallas-based Sanchez and Associates, located near the intersection of State Highway 121 and State Highway 56. This is not a small infill project. This is a 7-phase, decade-long build-out expected to include approximately 3,000 homes. The mix includes single-family homes, townhomes, build-to-rent units, and multifamily. Phase 1 covers 73 acres and is expected to break ground in late 2026 with over 600 residences. Homes in that first phase are expected to range from $250,000 to $400,000, with later phases potentially reaching the $500,000s and $600,000s. Future phases will also bring retail, restaurants, office space, parks, trail systems, and open green spaces designed to make the community walkable over time. What I think is really notable about this project is the intentionality behind it. Developer Martin Sanchez has said publicly that they're pushing for a design palette that respects the historic character of Bonham. They don't want to come in with cookie-cutter homes that are copy and paste. The land itself was once part of a 1960s-era ranch owned by Joe Kirkpatrick, a World War II veteran and founder of Cisco Boots, and the community is being designed to honor that legacy. And Powder Creek Ranch isn't the only thing happening in Bonham. D.R. Horton, the nation's largest home builder, just announced Asher Oaks, a 78-lot residential community on about 27 acres. Construction started this month with first closing expected in May and full build-out by 2028. Homes will be priced from the mid to high 200s with 6 floor plans ranging from about 1,200 to 1,900 square feet. These are D.R. Horton's Express Series homes designed specifically with first-time homebuyers in mind. In fact, according to the city manager, there are now 4 master plan communities in the pipeline for Bonham, including a 200-acre project called The Preserve and a 600-acre development near Bodark Lake. So why Bonham? Why now? It ties into the same growth dynamics we've been tracking. The semiconductor industry expansion in Grayson County, continued growth pushing demand outward from Collin County, and the reality that a lot of buyers right now are expanding their search radius to find affordability. Bonham sits at a natural pressure release point. It's close enough to connect to the broader job market, but far enough out to offer real affordability at a time when that is harder and harder to find. For buyers who are priced out of Collin and Denton counties but want new construction with modern amenities and community infrastructure, Bonham is absolutely worth exploring. I'll include the links to both Powder Creek Ranch and Asher Oaks in the show notes below. And now it's time for Jesse's real estate tip of the week. This week's tip is especially relevant given the builder confidence data we just walked through. If you're shopping for a new construction home in DFW right now, do not accept the first incentive package a builder puts in front of you. Treat it as a starting point, not a final offer. Here's why. As we just discussed, 40% of builders nationally are cutting prices. 65% are offering incentives. Builder confidence is sitting at 37. That's leverage. That is real leverage, the kind of leverage buyers have not had in this market in years. But here's where most buyers leave money on the table. They see a headline like $20,000 in closing costs or rates as low as 4.99%, and they assume that's the deal. It's not. Builder incentives are structured. They can be allocated toward closing costs, rate buydowns, design center upgrades, or a combination. And the way you allocate that incentive can change your monthly payment by hundreds of dollars. So here's the action step. Before you walk into a model home, talk to me, get pre-approved. Know your numbers, and when the builder presents their incentive package, ask one simple question. Is there flexibility in how this is applied? And are there additional incentives available on this specific home? You'd be surprised how often the answer is yes, especially on inventory homes that a builder is trying to close before end of quarter. Having the right strategy here can save you $10,000, $20,000, sometimes more, and that's real money that stays in your pocket. If you want help navigating new construction incentives, feel free to reach out anytime. And that is Jesse's weekly DFW real estate update for the week of Monday, February 16th. If you found this helpful, don't forget to like, subscribe, and share. And if you're thinking about buying, selling, or investing in real estate here in North Texas, I'm always happy to be a resource. No pressure, just real clarity. That's it for this week, and I will see you next Monday.